Morning, everybody. We're going to get started in a couple minutes.
It started to snow now. Oh boy.
Yep, it's snowing.
Looks like we still have people joining. Let's wait another 45 seconds if we could.
Okay.
Then we'll be ready to go. Okay, let's begin.
All right, everybody. Welcome to, this is the Akron Chapter SCORE Nonprofit Basics. This is Al Morrison. He's going to be giving our presentation today. Just so you're all aware, you will get the recording of this as well as the slides in an email later today. And then you can type in your questions in the chat or in the QA. Depending on how big this group gets, we'll see if we do any where you raise your hand and actually speak to the presenter. We'll see. We're at about 40 people right now. So, all right, everybody. Al, you ready?
I'm ready. Good morning, everyone. Welcome to Not for Profit Basics. If you've never attended a SCORE webinar before, welcome. And if you've been here more than once, welcome back. Glad to have you. So I think what we'll probably do, given the size of the group, is we will hold questions to the end. Please type them in as they come to you so that you'll remember what it was. You add them in, but we'll answer them at the end, and then we'll give everybody a chance to hear the presentation and then go on with the questions at the end. So what are we going to do today? The first thing we're going to do is talk about SCORE. Then what is a not-for-profit? How do you govern it? How do you manage it? How do you finance it? How do you set it up? So we'll take you through the steps, kind of peeling the onion as we go. So SCORE is a national organization with over 10,000 volunteers spread across 200 chapters in the United States. We are a US-based organization. We serve the 5-county area of Summit, Medina, Portage, Wayne, and Mahoning counties, and we have 40 experienced people to help you with whatever you need. And if you're from another chapter, welcome to the Akron chapter. And I would encourage you to reach out to your local chapter if you have questions and get a local mentor. Our mission as SCORE is to help small businesses just be absolutely great. And we'll work for you from the time it's a twinkle in your eye until the time you're making so much money you throw it out, anywhere in between. So wherever you are in your small business, startup, growth, development, wherever, we help people start up. We even help people sell their business. So we work from end to end on your business. Our vision as National SCORE is that every person has the support they need to thrive. Every person. We've had that vision for years and years where we haven't got to every person yet, but we're working on it. We do two things. We do one-on-one mentoring. What you need to know about that is it's free, it's confidential, it's one-on-one. You can meet face-to-face if you're local, phone, email, video. And sometimes we have clients that have one question. We answer the question and they're happy. I've had clients I've had for over 12 years now. So it can be very short or very long, depending on what you need, because this is all about you and you starting the business. We do workshops and webinars. You're part of the not-for-profit basics at the moment, but we do starting your own business, business planning, financial management, and others. So I'd encourage you to go to the website and find out what other ones are available and sign in, because again, these workshops are free. If you want to schedule a mentor here in Akron, we've got a website and a office number you can call. If you are somewhere else, you could use your local chapter, whatever that may be, .score.org, and find yourself a mentor or find the webinars there. Okay. What's a not-for-profit? It's an organization that technically is owned by the public to further some kind of public cause or some kind of public good to help the community. It's all about helping the community in which it operates. In 2005, we had over 50,000 not-for-profits that changed charitable status, and a lot of them were still functioning 9 years later. So not-for-profits seem to do really well. They're around for a long time, and they help lots of communities. They do lots of good for lots of folks. If you're thinking about it, the first thing I'd recommend you do is create a mission and vision. In other words, what do you want to do with your not-for-profit, and what's your long-term view? You're going to need a board, so think about a governing board. How are you going to deliver whatever that is, whatever service that is you're going to provide to the community? Think about the costs, put financial projections in together, and then you need to get legitimate. In other words, you have to register your name with the state, then get your not-for-profit status from the IRS, and maybe you have to register again with the Attorney General because you're going to be soliciting funds in the state. And maybe even some local organizations will require that. So just make sure that you get your organization legitimate. I said not-for-profits are to provide services to the community. They can be charitable organizations. They can give away goods or services, money. They can do education. They can be scientific. They can be chambers of commerce, social clubs, and others. So lots and lots of organizations can be non-for-profit, but what they're doing is providing service to the community in which they operate. A not-for-profit charity is designated by the IRS as a 501c3. And they can be public charities. In our area, it's the Akron-Canton Regional Food Bank, Goodwill Industries, Summit County Historical Society, or they can be public foundations that help people and give away money. So we have those two in our local area, and I'm sure in your area, wherever you are, there are also not-for-profit organizations you can look to. What's the difference between a for-profit and a not-for-profit? And as you think about forming a not-for-profit, make sure you're thinking about it in the right way and doing it for the right reason. In a for-profit organization, produces, markets, sells products or services to make money for its owners and investors. So that is a for-profit. It makes money for its owners and investors. A not-for-profit provides those same things to the community. Now, in either case, they operate very, very, very similarly. Both require that you make money so that there's money left over after you pay the bills. If you're a for-profit organization, that seems obvious. You want to provide income for the owners or investors. If you're not for profit, that may not be so obvious. In a not for profit, we call that money that's left over. We don't call it profit, we call it surplus. Surplus is good because it allows you to take advantage of opportunities that may come along that require money up front. For-profit organizations are privately owned or publicly owned and sell stock. Their income is for the benefit of the owners or the investors. They're governed by the owners or the investors, and they can be bought and sold, and the profits go back to the owners. So it's strictly a for-profit, make money for whoever the owners are, whoever the investors are. That's a for-profit. And majority of organizations in the US by far are for-profit organizations. Not-for-profit, I said, was technically owned by the community. There's no private interest, no stock, no investors, no owners. It's owned by the community. No one can benefit from the earnings or the money it makes. The board members have to be volunteers. Employees or other volunteers can't personally benefit from the not-for-profit. It's to provide services to the community. If your income is greater than your expenses, that money goes back into the organization. It's called surplus. It's governed by a board of trustees or a board of directors. So there isn't an owner that makes all the decisions. Decisions are made by the board of trustees or the directors. And as you think about starting a not-for-profit, if you intend to be on the board, then you don't get paid. If you intend to be the executive director, well, the executive director works at the pleasure of the board of trustees. So although I've never heard of it happening, legally, technically, if the board of directors decides to fire the executive director, which if you're the founding person, it could be you. So just give that some thought. The not-for-profit, if it's going to be terminated, can never be sold for a profit. The organization, if you turn off the organization, stop it, sell it, give it, whatever, the assets that are left over have to go to another profit. So if you've got an office and a desk, you've got to give that desk in the office to another not-for-profit. If there's money in the bank, you have to give that money in the bank to another not-for-profit. So it can't be distributed to anybody other than not-for-profit. Different than a for-profit, where if you sell that business, the money gets distributed to the owners or the investors. So again, as you consider for-profit or not-for-profit, take some of these into consideration. Which do you think you want to be? And why do you want to do it? Make sure you're doing it for the wrong reason. The wrong reason is to start a not-for-profit to make money. The right reason is to provide services to do something better in the community. Become a not-for-profit only and only if you intend to rely on donations, funding, or government or grants to fund your organization. It's not funded by investors or by individuals that expect to get a benefit from it. It's funded by donations. People give you money that get nothing in return. And 30% of the income has to come from donations. It can be in kind, it can be other organizations, but 30% has to come from public support. So if you're selling t-shirts and you're making a profit on those t-shirts, that's fine. But 30% of your income has to come from donations, not from the sale of t-shirts. So just keep that in mind if you're going to provide a product or a service for sale. Why would you want one? Well, first of all, you can get donations, which nobody expects to get anything in return, so you get to keep the money. You have tax exempt status. So in exchange for providing that service to the community, the IRS provides you tax-free status. So you pay no taxes on your income. You do, however, you do not pay federal taxes, state taxes, local taxes, or sales taxes, or any corporate taxes. So you don't pay those taxes. And because of your 501c3 status, the donors have the ability to deduct those donations. And you also have the ability as a not-for-profit 501c3 to apply for grants. And as you apply for grants, one of the documents that they'll want you to submit is the paper from the IRS that says, yes, you are a 501c3 not-for-profit organization. However, taxes that you do have to pay would be like property taxes, water, cleaning, Social Security on your payroll, Medicare on payroll, workers' comp, unemployment taxes, employee income withholding taxes you have employees. So the not-for-profit applies, not-for-profit tax-free status applies to income taxes. Again, your surplus, money left over after pay the bills, not for the other taxes that you need to pay. What's the disadvantage? Again, at a high level, the individual that starts it may lose control because the board of directors makes the decisions. Your purpose for being is limited to how you chartered it originally, or some things you can't do. For example, you can't lobby, you can't support political candidates, you can't take a side in a political campaign. You're subject to public scrutiny and transparency. In other words, all your documentation, all your finances, all your board minutes are open to the public if they choose to inspect it. And because it's publicly owned, the reporting requirements are going to be more extensive than for not-for-profit. Not-for-profit, the only people care about it if you're the sole owner is you. You're the only one that needs to see the books. You're the only one that understands the finances, or the investors if you have investors or other owners. But in the case here of a not-for-profit, the public has the right to see all of your finances, all of your documentation, all of your internal documents. Not that that's a bad thing, but just be aware that if asked for, you have to provide that. Not-for-profits still have to follow all the zoning requirements. You have to meet federal regulations, state regulations. So if you're serving food, you have to meet the health department regulations. If you're employing people, you still have to meet the equal opportunity laws and safety and health. You still have to meet those. So you're not exempt from anything other than income taxes. Some people think that a not-for-profit shouldn't make any money. That's absolutely not true. Not-for-profits not only can, but should make profit, or in this case, we call it surplus income, which is money left over after pay your bills. The same way with the for-profit, profit is money left over after pay the bills. That surplus income, because you're a not-for-profit, must go back into the services the organization provides. Maybe not immediately, but sooner or later. The surplus allows the not-for-profit to operate efficiently. So if you're selling t-shirts, and you've got an opportunity to buy 100,000 t-shirts for $5 a piece, if you don't have any money in the bank, you can't take advantage of that. So that surplus income, or a war chest, or something that allows you to take advantage of that. If you're going to have a fundraiser and it's going to be, say, a dinner dance, and the place you're going to have it wants money up front for the venue and for the food and for the band, and you don't have any money in the bank, you can't do that. So it allows you to take advantage of opportunities that come along. So just with a not-for-profit company, you should run it to make, or a for-profit company, you should run it to make money. The same with a not-for-profit, you should run it to make money. The only difference is what do you do with that money that's extra after you pay the bills. So if you have questions and you want to type them into the chat or the questions at the moment, I'll take a breather here for a second. Because the not-for-profit is owned by the community, it has rather strict governing requirements. First of all, it must have a board of trustees or board of directors. And those, as board members, represent the community. So they're the representatives of the community to the organization. The board sets the policies. They have financial fiduciary responsibilities. They review and evaluate any of the employees, the executive director, and the board is ultimately in charge. So there is no individual in charge. It's run by the board. Each and every state you operate in will have a minimum number of board members required. In Ohio, that is 3. So if you look at a for-profit organization, for example, Jane Goodmom could be the owner. She could be the owner operator. She has employees. She's the president. Her husband could be the treasurer. And when there's money made, she puts it in her pocket. In the case of a not-for-profit, the board of directors does all the governments. They set policy. They elect the president, the vice president, treasurer, secretary, and others. They hire an executive director who is the chief operating employee, COO, and that person runs the organization. So they are the chief operating officer, whoever that may be. In this case, it could well be Jane Goodmom, but Jane Goodmom then, if she founded it, doesn't get to vote on the board because she's not a board member, and things could go any direction when you don't sit on the board. The board of trustees or directors, in the case of Ohio, there has to be at least 3. There need to be enough members to do the work of the board. And I would always recommend an odd number so that if it comes down to a very tight vote, that you have a tiebreaker in there. Score, we don't recommend friends or relatives unless they have some specific expertise. It just the optics of that, if you've got your mother and father and brother and sister on the board, the optics of that doesn't necessarily look very good, particularly to donors. So just be aware that if when you're funded by donors, the donors will look at that very carefully. And in the case of term limits, I always recommend you have term limits, but you stagger the terms. So in any one year, you don't lose all of the board members or half of the board members. You stagger the terms so that if you have a 9-member board and the 3 with 3-year terms, then 3 of the members would roll off every year. You get 3 new board members every year. So you would only lose, worst case, would be 3 board members in any one given year with 3-year staggered terms. As you look for board members, they need to be committed to the mission of the organization. They have to be willing to give of their time, talent, and treasure, either all 3 or at least 1. They should be able to influence others in the community in terms of donations. It's nice if they have community contacts so that they can help raise money. They should understand not-for-profits and be willing to help raise money, because that's the job of the board, not only to run the organization, but to help raise money. They govern the organization. They establish the policies, goals, and objectives. They hire and fire the executive director, set the salary for the executive director. They evaluate the executive director. And the boards are collective decisions. In other words, they can either be unanimous or they can take a vote, but the majority in this case rules. So pick them carefully because they make the rules. The board is the ultimate boss. It hires and fires the executive director. So if you start the organization and you're the ED, think about that. The only people that can remove board members are the board. And absolutely avoid conflicts of interest so that the board members don't have any impropriety. For example, if I'm on the board and my wife sells office supplies, it would be really inappropriate for me to buy office supplies from my wife, her office supply store, if I'm on the board. So that would be a clear conflict of interest. So you want to be sure to avoid that kind of thing. Also, to have people on the board that have some experience in areas which you might need. Law might be one of them, banking, marketing, PR, insurance, and others. So as you pick your board members, it's nice to have people on the board that have some expertise you can use, particularly in finance to keep the books. And the treasurer, if you have any money, is an important person to manage the funds of the board or of the not-for-profit. We would recommend a nominating committee, and it's a committee that would identify the needs of the organization, needs of the board, identify candidates, determine their interest, and make a recommendation to the board, and then orient the new board members or new volunteers. So they're important. They're really the HR, human resource committee of the organization. The IRS requires that there be 4 officers, president, vice president, treasurer, secretary, and only one of those can hold two positions. So you could have a president, vice president, you could have a president, treasurer. Think hard about that, because some of those positions, like the treasurer, can be a lot of work. You might also consider other committees, a governance committee for finance, planning, nominating, operating committees for marketing and PR, fundraising, and maybe ad hoc committees for events. You might have an event committee for things as you need them. Those committees report directly to the board. The board should meet as often as necessary to get the work done for the organization. We would recommend at least 4 a year, although legally you're only required to have one annually. Every board that I've been on meets monthly. You need to set a time and date and place so that you can get the attendance. So you can't hold at your basement at 2 o'clock in the morning, because then some of the board members couldn't make it, and that then would be obviously not such a wise idea. So that's how the board gets governed, or I'm sorry, the not-for-profit gets governed. It's governed by the board of directors. So how do we operate the business? The executive director or the chief operating officer answers to the board, may attend the board meetings, but doesn't serve on the board, is not a voting member, implements whatever the board wants, hires staff if there's going to be staff, implements the program, oversees daily operations, and assures the bills get paid. So the executive director is the chief operating officer, the person that gets things done, makes it happen. If you're hiring employees, make sure the employees understand the mission. If there's things that need to be certified or licensed, make sure they have that capability. So you also should train those people so that they understand what the expectations of the organization, and be able to pass on the passion and mission and dreams of what the organization is there for. In terms of policies, all the policies that are established by the board should be in one place, so that if people need to inspect that, they can. Policies should be written, procedures should be written, and the date of these policies and procedures approved by the board should be included in your notebook policy book. As with any public organization, public or private, the money of that organization should be separate from any personal money of anybody. If there's checking accounts, savings accounts, investments account, they must be in the name of the organization, not in an individual. A finance committee should oversee the finances. The COO and the staff and the treasurer should prepare and review the board. You should keep written minutes of all meetings, including finance committee meetings. And the organization needs to work within its budget. A not-for-profit cannot operate at a deficit. It must have a balanced budget each and every year. In other words, the amount of money it spends must be equal to or less than the amount of money that it brings in. Expenses that are valid for a not-for-profit include salaries and benefits, accounting, fundraising, occupancy, insurance, legal, PR, and marketing expenses. So that can include website expenses, hosting, and really any business legitimate expense. Any business that's legitimate for a for-profit is also a legitimate expense for a not-for-profit. So we know how to govern it, we know how to manage it, how do we finance it? Income for a not-for-profit can come from earned income. In other words, money you've earned from selling t-shirts or fees for services. Donated income, it can be individuals, foundations, bequests, work you're doing for organizations, government income, crowdfunding, but all that income comes to you with no strings attached. Donations that come in have to be designated to the 501c3 charity. That's an IRS regulation. In Ohio, you have to register with the Ohio Attorney General to state that you're going to solicit funds in the state of Ohio. And I would imagine other states have very, very similar regulations. You may be required, depending on your city or county, may be required to register there also. When you collect donations, there's fundamentally two kinds of donations. There's undesignated or unrestricted donations, which means those are donations that you can spend on anything within the mission of the organization. Designated or restricted donations are given with a specific purpose in mind. Be very, very careful of restricted donations because that says you can only spend them on what they've been designated to. And my worst case story is a little country preacher outside of where we operate here in Akron had a really small little religious organization. He operated it out of his garage. He did all kinds of good work. And the donations that he got went back into serving the people in his local community for things that he was doing. He was very successful. An individual saw what he was doing, liked what he's doing, and put a bequest in his will that when the individual died, he was going to donate $25,000 to this little country preacher, which is a really good idea, except he restricted it that the money had to be used to build a church. Now, I may not be the sharpest knife in the drawer, but I'll tell you, you can't build a church for $25,000. So now this poor little preacher has $25,000 sitting in the bank account he can't do anything with. So be careful of restricted donations if they come in. Make sure it's something that you can spend. The compromise, if people are adamant about giving you a restricted donation, see if you can't have it restricted for a time frame. In other words, restrict it for a year, 2 years, 5 years, 10 years. And after that, it becomes unrestricted. So in the case of my country preacher, if that donation had been restricted for, say, 10 years, and he doesn't build a church in 10 years because he can't get the rest of the thousands of dollars needed, then it becomes unrestricted. You can spend it on the community. So just be careful of restricted donations as they come in. All donations, just out of courtesy, should be acknowledged in writing, but anything greater than $250 has to be acknowledged in writing for tax purposes, stating that nothing was received in exchange for that. Remember, all of this information is public. So donations are public, and anybody in the community can ask to see the source of those donations. No business can really run solely on foundation grants because foundation grants are usually one time. So don't expect a renewal if you get a grant from a foundation. They will always require some kind of written proposal, usually in a format that they designated or one developed by the foundation. Sometimes those grants will require written reports on how the money actually got spent, explaining the outcomes from what they did with that money. And they may ask you to publicize it, to put an ad in the newspaper or do something on social media that says, this foundation donated $5,000 to your worthy cause. So just be aware of that some grants come with strings attached. As you write those grant proposals, everybody be aware that they're very competitive. Lots of people are writing grants. And a 20% success rate is pretty good. Anything better than that is terrific. So you're going to do a lot of work. Some grants you're not going to get. So make sure you've got your materials, that you're ready with your mission and vision, program statement, budgets, because they're going to want to see your budget. It's always good if there's a foundation to get to know those people so that you're just not somebody that's sending a grant proposal. Just get to know them, go see them, talk to them, tell them what you're doing, show them the good work you're doing, then they're more likely to provide that grant to you. make a request on only what you think might be granted. So if the organization grants $5,000 in any one time, don't ask for six. And also don't expect that if you ask for five, you'll get five. So even though they may grant five as kind of the cap, don't expect that you'll get five, particularly the first year. And make sure you understand what the guidelines on the use of those grants. Follow up at the end. Thank them if you get one. Tell them what you do with the money. If you're denied, find out why. Maybe it's a learning experience for you. My experience with local foundations is they tend to want to fund things locally. They vary in size, but a large grant from the local organization would be 25,000. The national organizations tend not to source very small, very local organizations. They tend to fund ones with a much broader reach. You can apply, but again, your success rate may be low, and writing grants takes time and energy. So I would suggest you focus on grants that are granted in your region, for your region, or in your area, your city, state, for things in your area, city, state, whatever that may be, because you're more likely to get that. And make sure you've checked with the organization to find out why they grant money. And if that's not something the organization does, you're wasting your time in writing a grant. How do you find them? Every year, a 501c3 must file a Form 990 with the IRS. Those are public, so you can find organizations. Your local libraries usually will have books on the foundations. They're also a great source. Event programs, news publications also will tell you who's granting money. So they're hard to find, but they are findable, or they can be found. It's some work, so I expect to do some work to find the foundations and grants, but it can be done. So as you research them, make sure you have their legal name, address, and contact information, and who the contact person is. Find out their area of interest or focus. So if they're focusing on the arts and you aren't doing things related to the arts, don't waste your time. Find out who's eligible. Do they do it geographically? Sometimes they might change it, or they change it to something else. What do they provide money for? Will they provide it for operating money to pay salaries and rents and so forth? Or is it for capital improvements or scholarships or 1 year grant? Just find out what it's for. And usually grants are 1 year, sometimes two, but again, those are much rarer. If they have a specific format and deadlines, make sure you follow those formats and deadlines to the key, exactly right. So if they want 5 hard copies, you send them 5 hard copies, not 6, not 4, 5. If they ask for brochures, include brochures. If they don't ask for brochures, don't include them. And what they're doing is seeing if you can follow directions. And what they're looking for is if you follow directions, with a grant, there's a good chance you'll follow directions in spending the money that they give you. So just be aware, whatever they ask for, do it to the letter of the law. So what should you include in this grant or foundation request? Tell them about your organization. Tell them about the program, which you're asking funds for, how much you want, what's the benefit from that, what's the outcome. And again, send them a number of copies. If they want electronic copies, send them electronic copy. If they want hard copies and electronic, follow the instructions as you can, exactly as you possibly can. Challenge grants are someone will say, I will donate $5,000 to you if you can match it. So if you listen to NPR, when they're during their fundraising cycles, there's usually a challenge grant or two. Some member will provide money and said, if you can raise money in this hour or this day or this whatever it may be, they will match it. Fiscal years can be a little bit of a speed bump, because sometimes the grantor will want you to spend the money inside of either your fiscal year or their fiscal year. So if those two don't match up, you can get a kind of a mismatch and get out of sync. So city and counties, for example, usually run January through December, as do most not-for-profits, but not all. Some have a July through June, or in the case of the federal government, October through September. And if you're doing expecting grants from the organization, the closer you can match your fiscal year to their fiscal year, the easier it is to stay in sync with their grant cycles versus your grant cycles. So how do you set one up? Also, we would always recommend that you get yourself an advisor to help you through the process, because there's some questions you may have that, and having filled out government forms before, you're pretty sure there's going to be questions that you don't have a clue what they're asking. So find somebody that's done it before that can help you through that. You should always have defined exactly what are you going to do, how are you going to do it, where are you going to do it, and to whom you're going to do it to. So you have that defined in setting it up. So those questions are always going to be asked on whatever paperwork you file for your 501c3. Have a business plan that shows how you're going to obtain the money, how you're going to use it, mission statement, goals and objectives, define the services, who you're going to do it to, have a board of trustees already done before you file, and have a 3-year budget. So you can file that with your filing with the IRS. So having those ahead of time will save you going back and forth and back and forth. Defining your mission. Think about, are there others in the community that have a very, very similar mission? And does that make sense for there to be two? Or should you just partner with them? Think about who you're going to compete with for funds. Who are the donors, and are other people asking those same donors? Of course they are. And how are you going to compete in that? And what is your service or product niche going to be? So that, again, you have something unique that people can decide they want to fund that very unique mission. Define who you're going to do that to. Is it adults, teens, men's, women? People challenge individuals. What area are you going to serve? Is it going to be city, state, local? What problem are you solving? What does that customer base need? How are you going to find them? And how are they going to find you? If you need staff, where's that going to come from? Having a 3-year budget is very, very helpful, not only for you, but for your funders to see that how you're going to use that funds. Not-for-profits almost never can raise money through loans. Banks will hardly ever raise money, loan money to not-for-profits, and you don't really have investors anyway. They're raised through grants, donations, fundraisers, crowdfunding, but not through loans or investors. So as you put your budget together, define what are the sources of income. The more specific you can be, the better it is. So use the name of the foundation you're going to solicit. Have a realistic funding plan in your 3-year plan. Just if it looks like it's sky high and unrealistic, when donors look at that, they'll say that's not going to work. So they won't donate to you. Make sure that you stay legal. The Secretary of State is where you file your articles of incorporation and verify your business name. The IRS is where you submit your application. You can use a Form 1023-EZ or 1023. The 1023-EZ is you're only going to have an operating budget of $50,000. More than that, you need the long form, which is a 1023. The easy form is 3 pages. The 1023 is 13. So just think carefully about what you're going to do. And before you file, have your bylaws or your code of regulations so that you know how the organization is going to be governed before you start it up. Once a year, you have to file taxes with the IRS and probably with the Attorney General of the state you're in and others. It's the 990 form, and there are 3 different versions of that. The 990 is for $200,000 in revenue or greater. The EZ is for $50,000 to $200,000, and the form 990N is for under $50,000. But you must file every year, even if you have no revenue, you do no business. Once you file your file and get your 501c3, you must file your 990 every year, even if you have no revenue and do not operate. Again, because the IRS can't tell the difference between you not having any revenue and didn't file, and we had a lot of revenue and just didn't file. So to be sure that you don't come under their watchful eye, make sure you file your 990 every year. Okay, last but not least, what do we do next? Step 1, I suggest you get a business plan. You can attend our Business Planning 101 webinar. I would suggest, again, you get yourself an advisor, a mentor. I like SCORE because that's who I work with. There are other organizations that will do the same thing. Some are free, some are a fee for service. So get yourself an advisor. There's other resources. There's books that you can read. And now we're going to answer questions. So thank you for being attentive. I think we have a bunch.
We do. Oh, let's see. We'll start the first one. What are steps to obtain a 501c3? Can you file that as a startup right after you register with the state?
Yes, you can. There's no requirement that you be in operation when you file your 1023, your application. So you can do that at any time.
I don't know if you can answer this one. In Michigan, how many board members are required?
I do not know the answer to that because I'm in Ohio. So I would suggest you find yourself a advisor in the Detroit office of SCORE or other, and they should have the answer to that. If not, you can probably find it on the Secretary of State's website. That's where it most likely be.
Oh, how does the director, let's see, how does the director, if providing services, afford to run? Can the director or president take a salary approved by the board?
The executive director is paid a salary by the board. The president is the president of the board and is a volunteer and doesn't get a salary. The executive director is the chief operating officer, where the president, which is a volunteer position, is the chief executive officer of the 501c3 corporation. So the executive director gets paid. The pay is set by the board, voted on by the board, and paid from the proceeds of donations.
So along that, can you pay your board members a salary or stipend?
Nope.
Nope.
Nope. Not a dime. All board members must strictly be volunteers and may not benefit in any way, nor can their friends, family, relatives in any way profit, make money, get cash from their participation as a volunteer in the 501c3. I think somebody said, can you have more than 3 board members? Absolutely. Technically, you can have as many as the bylaws allow for. 3 is kind of, in my mind, a minimum number that you'd want to have. Because if you have 3 board members and the board of directors votes in new board members, for example, and you've got 3, and one of them gets run over by a bus, you now only have 2. Well, you don't have a full board, so maybe you can't vote in new board members, so you're out of business. So you always want to have extra board members. In fact, because as you know, the way people are today, if you had a board of 10, probably not 10 are never going to show up. You're never going to have all 10. You'll get 9 most of the time, maybe 8, but you'll never have all 10. That's people are too busy today. So yes, I'd recommend you have more than 3. Long-winded answer.
Can nonprofit employees be paid? So if they, oh wait, if nonprofit employee can nonprofit, we already answered that. How do you pay vendors to work for the company?
You write them a check out of your checking account, so you can pay vendors. You got to have money in the bank, but you would pay it out of the business account for the not-for-profit. And again, you always want to have a business bank account in the name of the not-for-profit, so you don't mix in anybody's personal money with the not-for-profit money. You would never do that in any for-profit business. You certainly wouldn't want to do it in a not-for-profit business.
What is the best entity for an educational club? We have an operating club established many years ago. As a new president, I learned that our entity expired. Do we need an attorney?
You can reinstate it under certain conditions. And the answer is yes, if I would recommend an attorney for that. Just as a sidebar, the SCORE advisors are not attorneys, do not give legal advice. They are not accountants, do not give tax advice. So just be aware of that.
Can an executive director sit on the board of directors? If my children are involved, rather for profit or nonprofit organization, can I place the business I start under a trust?
Can a trust own a business? The answer to that is yes. If your children are involved, then that gets a little sticky. I would want to talk with a SCORE advisor, SCORE mentor on that, so that to get all of the details, because I think my answer is it depends. So let's make sure we know what it depends on.
What documentation restricts donations? Or what documentation restricts the donations?
When the donor presents the donation to you, they will usually say, this donation is to be used for XYZ, whatever that may be. If they don't, and there's no designation, and again, the bottom of the check is a place where somebody might write a designation, but in the case where there is no specific designation, then I would consider that unrestricted. So if a donor wants it restricted, they would tell you what they want it restricted for. If that's something that you can do and you can use that money in its restricted form, for example, maybe they would want to give you money for a new computer system. If you need one and can use one and would get one, then that's fine. If they give it to you, like my little country preacher, to build a church, and there's not enough money to build a church, I would say, thank you very much. Let's either unrestrict it after a period of time, or unrestrict it, or you can refuse the donation if you can't possibly ever use it. Because that gets really sticky at the end, because that restriction carries over forever. So there's no good way to unrestrict it over time.
Can businesses pay for a service through their foundation and request that the nonprofit sign off that the money was not in exchange for a service or product?
No, you're trying to skirt the intention of a not-for-profit. I would not recommend that. Again, I don't have all the background behind that, so I would talk with a SCORE advisor on that, or an attorney if you would. But I think you're getting pretty close to the line on that one. The not-for-profit is in business to provide service to the community, not to avoid taxes. So just be aware of that.
How do for-profit entities operate non-for-profits when the scope of how they operate overlap?
Read that again, please.
How do for-profit entities operate non-for-profits when the scope of how they operate overlap?
I'm not sure I know that you can do that. I'd want to see the specifics of it. I'd be concerned that they're doing something that's outside of the intention of the IRS regulations. And IRS is not an organization that I would like to tangle with if I were part of either one of those two entities. So I would check with a SCORE advisor where he or she could get those details, or you talk with an attorney. Just keep you out of jail, nothing else.
How can you find a good nonprofit tax accountant for filings?
I would interview them. There are some accountants which do not deal with not-for-profits at all, and a simple phone call would answer that question for you. Or send them an email, contact them and said, do you deal with not-for-profits? And if they say, yes, I do, I would ask, which not-for-profits do you service? And I would like to see how interview some of your customers or your references. And I think any legitimate accountant would be more than happy to give you that information. Again, with permission from those other organizations to do that.
This person's starting up a primary care clinic, but also wants to start up a nonprofit alongside to help those patients who cannot afford care. Is it possible, and how would it work?
To provide service to patients that can't afford it, you don't need a not-for-profit. You can do that under the umbrella of the for-profit business. You just don't charge them for the service, or you forgive them. If you want to do that, you could have your for-profit provide donations to the not-for-profit to, again, provide free service to individuals that can't afford it. But there is no real benefit to that, either operationally or tax-wise, or legally for that matter. The only reason you would want to have a not-for-profit in that scenario would be if you're going to get donations or grants to provide that service for those patients that can't afford it. If you're going to do that, then that's fine. If you're not going to get any donations, then it's just extra work with no tax or legal or operational benefit.
Is the 30% rule for annual income from donations a state-by-state or federal regulation?
That's a federal regulation. That's an IRS regulation for a 501c3.
How can donors deduct donations? What is the amount that they need to give back to be able to deduct it? How to?
If I make a donation and get nothing back in return, I, the donor, can deduct all of that donation. If I make a donation and I get something back in return, then I can only deduct the amount over and above the fair market value of whatever product or service I received. So, for example, if you run a fundraiser that happens to be a dinner, and let's say the tickets are $100 a piece. If the dinner costs 50, then in the tax letter that you would write to them, it said, thank you for your $100 donation, but only 50 of it is deductible because the cost of the dinner was 50. So you can only deduct as a donor what is over and above the fair market value of whatever good or service you received.
Oh, does money made during the year need to be used by the end of the financial year?
No. Uh, no, unless it's from a grant that specifies it must be used in either your or their fiscal year. So come back to my dinner, my $100 plate dinner. I've got $50 in cash that I made from the dinner. I take that $50 and I can spend it this year, next year, 10 years from now. However, if you get a grant, and that grant specifies, and it will specify in the grant that it must be spent, whatever that may be, in a year, 2 years, whatever, before 2027 or something, whatever that is, then you must spend that money. That gets a little tricky because now you have to keep the books to make sure you do spend that money and be able to document it. So it's a little tricky. Again, if you've got a good accountant, that's not that hard to do.
As a nonprofit, do I need to charge sales tax when I sell items at a fundraiser like t-shirts, books, etc.?
If the state requires that you have a sales tax, then the answer is yes. Ohio has a sales tax. There are other states that do not have a sales tax. So in terms of sales taxes, you follow the state law on that one.
We have started our nonprofit, have a board, and are planning our first event. The organization is all about equipping leaders. Is it allowed to offer tickets to the event in exchange for certain donation amounts?
Sure. Yes, you can. You can give away tickets for free if you want. There's no restriction on that one. But it costs you money to give that ticket away for free, or costs you money. But you can do that. Not a problem.
All of the companies that we have approached claim that they need to give more than 25,000 in order to be able to claim it on taxes. Is that true?
I'm not a tax expert, but I know in the IRS regulations, there is some minimum amount that you have to, some threshold amount before it's deductible. And I'm not exactly sure what that number is. Again, a tax advisor, tax accountant could tell you that number for the tax year it's in, and I would guess, like the IRS regs, it changed from year to year. When I looked at it 5 or 6 or 7 years ago, it was $10,000. That the first 10,000 was not deductible. After that, you could deduct it above that 10,000. I do not know what that number is today.
Let's see. What were the 2 books for reading that you mentioned?
The 2 books are, put them back on the screen here. One is the Not-for-Profit Kit for Dummies. I'm sure that's available on Amazon. And then How to Form a Not-for-Profit. I know in Ohio, the state of Ohio has a booklet, very small booklet on how to start a not-for-profit. I suspect, I don't know that, but I suspect other states do. But there's a couple there.
What is the structure for a business to create a not-for-profit?
Say that one again.
What is the structure for a business to create a nonprofit?
Well, the structure is you need a board of trustees that has a president, vice president, secretary, and treasurer on that board. Then the business would be structured however it needs to be structured to provide whatever goods or services that would be. It would be exactly the same organizational structure of a for-profit business that was providing that same kind of service. So if you're thinking about the organizational structure, it would be structured the same as if it were for-profit. Because, as I've said, a for-profit, not-for-profit should operate the same way. There's no difference in the way they operate. The difference is in what you do with the money when it's left over at the end. Is the only difference.
When you look up nonprofit regulations in Ohio, it states that an individual can run a nonprofit by themselves and that exempt from the minimum board members. Is that true? I intend to be the sole operator director with assistance from volunteers. Would I still need to solicit for board members?
It's the IRS regulation that requires a board of directors. Before I made that decision, I would want to talk to a lawyer to make sure they understand the IRS regulations as well as the Ohio or the state regulations on that.
What are the positions in the nonprofit that we should hold so that we can maintain our position and don't get voted off?
There is no legal way to structure it with a board of directors and a paid executive director that the executive director cannot be voted out. There's no legal way to do that. That's one of the things you have to wonder about. I have not ever heard of it happening. I've asked some of my colleagues in the not-for-profit world if that's ever happened, and the answer is not in their memory. I can't tell you that has happened or hasn't happened. What I can tell you is that legally it could.
We have started our nonprofit, have a board, and are planning our first event. The organization is oh wait, I already read that one. No, I didn't. Okay. We already covered that one. Do you have to fill out the beneficial ownership report for nonprofit organization?
No, you do not. That at the moment is for LLCs.
And
I read the regulation. They've just extended the deadline, interestingly enough, to 2025, December 31, that beneficial ownership information, BOI filing. I believe if you start a new one, you have 30 days to file it after you get your for-profit LLC. But the existing LLCs don't have to file their beneficial ownership information till the end of 2025. They've moved that deadline from the end of 24 to the end of 2025.
Can one of your board members be the executive director, and can the president be the executive director?
Can any of the board members be the executive director? If that's the question, the answer is no.
Okay.
Remember that the board are all volunteers and the board members don't get paid. The executive director is not a board member. That person may sit at the board, but they can't vote. And they can be paid. They don't have to be paid, but the executive director can be paid as the employees of the organization can be paid. But an individual can't be both on the board and the executive director and get paid. If I'm explaining that.
Can the organization pay for the travel of board members to meet in a certain location for an in-person board meeting? Board members are located all over the country.
I don't think so. But I would check with a lawyer on that one.
And two, with that, do you feel like if you have to tell your donors where your money is coming from, will your donors want to be paying for the travel of volunteers, board members?
That's a really good point.
Right?
Because well, that's the optics. That comes
Mhm.
down to how does it look? So I'm got my not-for-profit in Florida, and every winter I have a board meeting and I fly all my board members down to Florida. Now, if a donor looked at that, what would the donor say? Some might not care, but some might say, wait a minute, hold on here. You only hold board meetings in the wintertime, and you fly your board members down to Florida for a board meeting? I just wonder about the way that would appear, especially if one of the news media picked it up. How would that play on Fox News or CNN? I don't know. I'm not sure I'd want to be on the board if that was happening. But I would check to see if it's legal, first of all.
Let's see. Can nonprofit companies have a credit card?
Yes. Because it operates like a for-profit business. So yes, it can have a credit card. It's got to pay its bills. It's got to pay taxes, sales tax or anything. But yeah, you can have a credit card.
I accidentally filed with the 1023 EZ with the IRS, but my name of the organization was not accepted by the state. What can I do about the 1023 EZ?
Oops. Did your 1023 get accepted by the IRS? If the answer is yes, that's a problem. The way it's supposed to work is you file with the state first to get the name. You register the name in the state as a not-for-profit entity. Then you file that name with the IRS. I would suggest that individual got some bad advice to file first. If the IRS has not accepted your application and you do not have a 501c3, then you're golden, because that is not registered with the feds. If they did accept it and the name is not available in your state, then I would suggest that you take that 501c3, and there's a term for it. I want to say cancel it and start over again.
Oh, when you talked about services that a 501c3 provides as being for the public's benefit, can you define the public's benefit, please?
So public benefit would be something that the public needs that you're providing for free. So, for example, the elderly might need their shovels walked in the winter. So you could have a walk shoveling not-for-profit that would shovel the walks of the elderly in the winter. That would provide good to the community. You could have an educational not-for-profit. And so you would take underprivileged children and educate them on financial literacy. You could even do it with adults. You could have an organization that would teach woodworking, again, for free. It's a service you provide to the community for free, but something the community needs. Again, when in doubt, I would talk with a SCORE advisor on what you think the good is you're providing to the community, and if that would qualify.
If you're hosting a fundraiser that is selling donuts, do you need a vendor license?
If your local municipality that you're selling the donuts in, and I suspect that's at the county level, requires a vendor's license to sell donuts, then yes, you need a vendor's license to sell donuts. If your area does not require a vendor's license, then you probably don't. But I would check with I think it would be the county auditor office that would be able to tell you whether you need a vendor's license to do that.
Can you have a silent member on the board?
Can you have a silent member on the board? You can. I don't know why you'd want one. The whole purpose for a board member is to help you raise money and to govern the organization. If you're doing it just so you've got a seat filled, there's nothing you can do that. And I would imagine if I asked 10 not-for-profits, you have somebody on your board that is silent, they would say, sure, I do. I've got Al. He never talks at all. He just sits there, votes. Not sure that's helpful to your organization, but there's nothing that says they have to speak. I think if they didn't attend the board meeting, that would be something different. Then I think you'd be kind of not fulfilling the spirit and intention of having a board that governs the organization. In the extreme case, let's say we have 5 board members and 4 of them don't show up, don't attend, don't say anything. I don't think that would qualify as a board meeting.
What is a beneficial ownership report?
Beneficial ownership information filing is a filing you make with the U.S. Treasury Department. You do it through the website FINCEN, FinCEN, Financial Center. It's a 3-page filing. And what you're doing is identifying who are the people that have some kind of ownership in it that they benefit from. So if you've got 3 owners of a 501, 3 owners of an LLC, those 3 owners would have to be identified in the beneficial ownership information filing as owners that benefit from being part of that organization. The stated purpose for this is to identify money laundering sources or organizations. And if you go to the FinCEN website, it will tell you everything you need to know about why they want you to do it and what the penalties are if you don't. Be aware the penalties, last time I checked, were pretty severe if you didn't file. So I would absolutely file it as soon as possible. I've done it. The website is very simple to do. It just asks you some basic information, all of which you should have. The tricky part, if there is a tricky part, it wants a picture of some government identification document. So that could be a driver's license, it could be a passport. The restriction is that picture that you have is 4 megabytes or less. If it's more than 4, it won't take it. It says, nope, too big. So I would have me a picture of my driver's license or my passport ready to go when I file that at FinCEN. It's free, by the way. They don't charge you to do that. Make sure it's under 5 megabytes so you can drag and drop it into the little square they have on the bottom of the form.
What is the best way to attract board members? Can board members of your for-profit be board members for a nonprofit?
Sure. I can be a board member to more than one organization. So the answer to that is yes. The way you attract board members initially is to talk to folks that have a similar liking for what you're doing. They have a passion for what that service is or whatever it is you're providing. And the world's a pretty small place, I'm learning, and the people that have similar likes to mine are usually pretty easy to find. But a personal contact is always the best way to attract a board member. Look them in the eye, shake their hand, and said, here's what we're going to do. Is that something that you can get behind? Hopefully the answer would be yes. And if not,
right. Oh,
the
sorry.
board member certainly contribute. Give us money. Don't want to be a board member? That's fine. Just give us money.
All right, last question, and it's about the executive director. Do you need to have an executive director?
No, you don't need to have one. The question is who's going to run the organization. It wouldn't be unusual for a startup not-for-profit where the board members actually run the organization. So one of them would be the treasurer, would handle all the money. One might be the person that would do whatever it is needs to be done. If I said shoveling the walk for elderly, the board members are more than welcome to shovel the walk of the elderly. There's nothing that you don't have to have an executive director. You don't have to have a team of people to do that. The board members can do it. In fact, the organization I'm currently part of started out with no executive director. All the work was done by the board members, which is fine. They can be volunteers, but the only thing is they can't be paid for their service.
All right, let me just double check in the chat if there's anything else. Nope, that's it. All right, everybody.
Thank you all for attending. Good questions.
I do have two people with raised hands.
Okay, if they're still there, let's talk at them.
All right, let me find them.
Talk with them.
All right, Therese. Oh, maybe not. Nope, they're gone.
Okay.
All right, everybody. Thank you so much for joining us. I appreciate it. Al, thank you for all the wonderful information. You guys will be receiving the slides as well as a recording of this. So it was a lot of questions at the end, so you can listen through it again and take notes.
Do you have a copy of it so you can send it out?
I have an old copy. If you've updated it recently, then I would need a new copy.
I have not updated it recently.
All right. All right, everybody. Thanks,
everybody. Have a good week. Have a good weekend. Happy holidays. Happy New Year.
All right. Bye, everybody.
Bye-bye.